Hi guys, welcome back to the YouTube channel. This is going to be chapter 2 of the NASDAQ mini course. Chapter 1 is already up on the YouTube channel. That was covering a long-term perspective, higher time frame analysis. But in chapter 2, we're going to be covering an intermediate term perspective. We're going to be looking at the weekly range, the weekly candle, and how we can position ourselves in it. So what are we going to cover in this episode? We're going to cover weekly profiles, right? So determining what weekly profile the weekly candle is going to create. Is it going to be Monday, Tuesday, Wednesday, low or high of the week? Are we going to have a consolidation Thursday reversal? We're going to be looking at that. And we're going to use the economic calendar to help us aid in picking which one of the weekly profiles is likely to be the profile for the upcoming weekly candle. It also helps us choose which days inside of the weekly candle are going to have the largest volatility and the biggest range expansion. We're also going to be looking at order pairing for the weekly candle, a range to work off of to trade the weekly candle. We want to go from buy stops to sell stops for bearish or sell stops to buy stops if we're bullish. And we want to use that range to trade off of for our weekly expansion. We're also going to be looking at changes in the state of delivery. So when that high or low of the week is set, what is that signature that signifies that the market is actually changed its delivery from bearish to bullish, and we're going to create that open, low, high close. That's what we're going to cover here. And lastly, SMT. All right, so here's the first weekly profile we're going to be looking at. This is the weekly candle, and these are the 5 days that make up the weekly candle. When we have a Monday low of the week, which is actually very common in NASDAQ and S&P, we're going to see Monday hit a hard time frame key level. This key level is always going to be a H4 time frame or higher, right? So this hard time frame key level is H4 or higher. The market can open immediately there at the hard time frame key level. Let's say if Thursday, Friday retraced in the previous week and run some stops out, we can see Monday create the low. Then usually Tuesday and Wednesday continues to see a decent range expansion before a high is formed during around Thursday or Friday when we have the Monday low of the week profile. We've got Tuesday low of the week, which is when Monday just sits or retraces towards the high time frame key level. Then we see Tuesday run out Monday's low, using Monday as sell side inducement into the high time frame key level. We see an expansion, and then Wednesday, Thursday, you usually see a continued expansion with Friday topping out the end of the week. Wednesday low of the week. This is usually when we start up higher from our key level, and Monday, Tuesday will be a retracement. And then Wednesday creates the low of the week. And then Thursday, Friday usually sees an expansion. Usually when you have a Wednesday low of the week, the news for the economic calendar is towards the end of the week, right? So this is how we use the economic calendar to aid in picking which weekly profile is going to be the profile for the weekly candle. And another thing with Wednesday low of the week, you'll usually see that Friday ends up being an expansion as well. And lastly, Thursday low of the week, which is consolidation, Thursday reversal, right? So this usually is the case when we have a lackluster week in terms of the economic calendar and news events, when let's say Monday, Tuesday, Wednesday, there's no news at all. And then Thursday, you have a high impact news event. Usually you'll see something along these lines where Monday, Tuesday, Wednesday is consolidation, right? And then Thursday trades into the key level. That's the reversal point, and Friday sees a bigger expansion. Okay, bearish thematics here. Monday high of the week, same thing here, with Thursday, Friday usually topping out. Tuesday low of the week running on Monday's high as buy side inducement into the key level. Then Wednesday, Thursday continuing with usually Friday closing out the week. Now that's not always the case, but usually more often than not. Then we have Wednesday high of the week, usually formed when there's a high impact news event. Again, when the news event is later towards the week, or such news events like CPI, which usually land on a Wednesday. That's usually when you'll see Wednesday high of the week. Then consolidation, Thursday reversal. We use the economic calendar as a reference. We typically do skip Mondays when we're looking for a one-shot, one-kill trade. This is trading the entire weekly expansion because there's no high impact news events on Mondays, usually. And without Monday's candle closure, there's insufficient data to anticipate the weekly profile. So when you have Monday's candle there after it closes, it gives you a good information about what could potentially be the next profile for the week. Right? So if Monday is trading up to a key level, for example, and we've just fell short of it, you could anticipate Tuesday, if there's a news event, to run out Monday's high and then sell off. If Monday hits the high time frame key level and straight away expands, gives us CSD, everything we're going to be looking for in this episode, then you can anticipate, okay, Monday has already set the high of the week, so let's continue with Tuesday, Wednesday. All right, the second thing we're going to include here is a range. So when we're looking for a bullish weekly candle, we want to be looking for buy stops and sell stops, right, to trade off of. So for bullish, we're going to be looking for a range low to be taken first into a key level, right? And then we're going to be looking for that change in the state of delivery, SMT, and then for the market to attack the range high, and that becomes our weekly target. Bearish schematic, same thing here, premium PD array. Let's say this is Tuesday, Wednesday. This would be Wednesday, Thursday here, right? And we're looking for the range low as a weekly target. Okay, into our first example here on the NASDAQ. What we have here is exactly this. So you can see here the bullish version, right? So we have our premium and discount here. We have our high time frame key level for the week. I told you it'd be 4 hour and higher. This is a 4 hour FVG. And then we have a range low to range high just sitting right above it, right? So the sell side inducement here, okay? So the market trades back down here, and this is where the low of the week is set, right? At this high time frame key level. Again, with the weekly candle, we want the high time frame key level and the low or high of the week to be obviously below the weekly open. So you can see the market opens up here, right? So we create the low of the week below the weekly open here. It ends up being a Wednesday low of the week, running out Monday's low. Okay, then we see SMT, right? And then we see Thursday and Friday's range bring in the biggest expansion of the week, right? The reason for this is right here in the economic calendar. You can see there's no news up until Thursday, right? And Thursday, Friday is this here. So you can see the biggest volatility. And when you get the move in alignment with the high time frame institutional order flow is on Thursday, right? So this is trading down here into retracement, and then we see the market trade up higher. And like I said, if we have Wednesday low of the week here, usually you'll see Friday expand as well, right? So Wednesday, Thursday, Friday end up being your distribution days in this week. And you can anticipate this beforehand just by simply looking at the economic calendar. Another thing, notice with the backing of the economic calendar here, we see that Monday to Wednesday, there's no news events, right? So if we look at Monday here, here's the open. This ends up being Monday. Tuesday goes back in the range, and then you have all of this price action here, right? So all of this here chopping back and forth can be anticipated beforehand due to the economic calendar lacking any news events, right? So we don't have to sit and get chopped up in this when the economic calendar is telling us that this is very likely and to sit out until Thursday, Friday. Okay, now the change in the state of delivery. So at what point here can we start looking for the buys here? When are we confirmed that we're changing the state of delivery from bearish in the retracement to bullish back in alignment with the high time frame institutional order flow? We're going to be using the change in the state of delivery. So the change in the state of delivery is an order block, but it's the collection of down closed candles that trade into the high time frame key level and sell side liquidity when you're bullish. When we see the market close above the bodies, okay, that's very specific. Close above the bodies of the highest up close candle with the bodies, right? So body to body closure there. Right there, that's your change in the state of delivery. Okay, we don't need the bodies to close above the high. It just needs to be body to body here. So same thing in a bearish scenario, right? We've got our buy side liquidity run out here with the order block into a high time frame key level. As soon as this candle's bodies close below the bodies of the lowest up close candles collection, that's the order block. Right there, the delivery state has changed from bullish to bearish right there. So the algorithm will start seeking sell side liquidity at this stage. So let's just remind ourselves here, this is what we're working with, the narrative here. Everything is in play here. And now we're looking for that change in the state of delivery, right? So when we're looking at a change in the state of delivery for the weekly low or high, what time frames are we looking at? We're looking at 4 hour, 1 hour, and 30 minutes, right? We don't want to go lower than the 30-minute chart. So right here, we have Wednesday low of the week as the market is trading down into the high time frame 4 hour key level and sell side liquidity. We can see the collection of down close candles here, all of them together, 1, 2, 3, 4, 5, that trade into the sell side liquidity here with the range low and into the high time frame key level. Right there, the bodies, when bodies close above it right here, the market has changed its state of delivery from sell side here. The algorithm is now going to start seeking buy side liquidity above the highs here. So this change in the state of delivery happens, and then we're going into Thursday. So we know we're just looking for retracements back below sell stops, right? We want to see a stop hunt, and we're within this order block here before the market starts to trade higher, which we do on Thursday and on Friday here. Okay, now jumping into the example that I shared from the high time frame analysis in the last video, chapter 1. This was the move I called on the higher time frame, and I'm going to show you how I called intraday plays as well, right? And everything that I had in mind was based off the weekly profile, which days should expand, what was the lower high of the week, etc. So here is this move. It was the higher time frame key level we had here, sell side inducement. We had everything regarding institutional sponsorship and the higher time frame analysis that I gave you guys last week. And from right here to here, that was the analysis. This right here is the weekly candle, right? We're going to be looking at, and this is that move in the screenshot you saw, right? So here's the weekly. From here to here, this is 1 week, right? Here's the low of the week. You've got the high of the week here. Let's remember everything. We wanted to incorporate the economic calendar, premium and discount, want to use a range, SMT, change the state of delivery, etc. We can see we have a premium to discount here after a high time frame change in the state of delivery. We then see the market start to retrace and engineer a range, right? So we've got buy stops and sell stops, right? And if you guys aren't too familiar with spotting ranges or how to identify them and trade them more in depth, there's a video on the YouTube channel, The Secrets to Premium and Discount. So the market opens up in the week, right there with the weekly open. We want to see our high time frame key level, etc. below that. So we have these down close candles. So we're trading within an order block here in discount with a breaker here as well. Then we have our range low and high. The market takes out the range low here, right? And then we start to see the market trade higher, making a Monday low of the week here. So when the market trades below here, we are then watching for SMT, which we have with YM, and a change in the state of delivery, right? So we're on a 1 hour chart here. And as you can see here, the collection of down close candles here, 1, 2, 3, 4, 5, 6. When the market closes above the bodies here, notice we didn't close above this candlestick's high here with the bodies, right? That doesn't matter. It's the bodies here. The bodies closed here. We then see the market change its state of delivery from bearish to bullish. And we can anticipate that this is the likely low of the week because everything else is in play here. We then see the fair value gaps after here. So once the delivery state changes here, this is actually New York session. So whether you are in a lower time frame, and I will cover this exact example in the next episode, chapter 3. For the scalping model. So we've gone from long-term, intermediate, and short-term perspective with the same play that was called in the Discord group. We see that expansion in New York session, okay? And because the delivery states changed from bearish to bullish, we're going to see the bullish PD arrays get respected and the bearish PD arrays get ran through. We see the market then create a dealing range here. We trade back out down into a discount for value gap here. And then this is actually PM session creating a low in the same day. And then the market trades higher, and then the next day there's a new day opening gap, and it creates a bullish new day opening gap here with a big move higher, right? We still know our weekly target is up here, right? So this is Monday's trading here, right? And this is Tuesday. With that in mind, we have not taken out the range high with the buy stops here. So we can still anticipate Thursday to continue the move because we have Monday low of the week. Thursday and or Friday will cap the high of the week. However, we haven't taken out the range high. So we can continue to trade on Thursday here as long as we trade into a high time frame key level, right? So this move from here to here, this is Thursday's trading, okay? Call this as well here, right? So I want to see trade back down here into the new day opening gap and then see higher prices for New York session. Now, the reason, right, I'm including this is because I want you guys to see that I'm calling these moves beforehand. And the reason I was able to anticipate this was actually the weekly profile because we had Monday low of the week here. Okay. We've trading from a range low to high. We are yet to take the range high and we've seen retracement during Wednesday. So Thursday being a continuation to then cap out the weekly range up here with a Friday high of the week makes the most sense. Okay. So Market trades back down here. We also do have a fractal range here. So sell stops here and buy stops. Market trades below here. There is SMT with ES. And then the collection of down close candles here. We close above here, the bodies, change in the state of delivery right there. It could be a long here or in the New York session, which is this candle here. This is the 8 a.m. candle. Now, from here to here, okay, that is your weekly candle right there. And this is the weekly candle. This is what it looks like on a hourly chart, right? So you can see the open here. We then trade down lower into a high time frame key level in discount of a range low right there. That's the low right there. And then we see the change in the state of delivery here, right? This entry here and here is all within the wick here. Why? Because it's below the weekly open, right? So using the weekly profiles like this, even when it's Tuesday, you can still find yourself getting the lowest point, getting into the wicks of the weekly candles just by understanding this here, right? And then within the range expansion here, we're trading a continuation play, right? So if you guys haven't watched Never Miss a Trade video on YouTube, you can have a look at that on the YouTube as well. And it explains how to catch every move inside of an open high low close or open low high close. Okay, we're going to look at the next weekly candle as well. So going back to the last chapter, we had a wick below this candle here. So candle closure technique, and then a close above this candle here. This is a bullish signature, right? We're closing above previous candles. That's bullish, right? This is also a down close candle that gets engulfed by a bullish candle. This becomes an order block. So this would be the high time frame key level that we would be using for the next weekly candle, and it's another open low high close. So let's look at that. Right, so buy side liquidity here, our high time frame target is still in place. So we continue with our time frame order flow. Weekly candle trades down here. Now, I want you to notice that this is actually Wednesday. So this is Monday, Tuesday, and then we see Wednesday low of the week here, right? At a high time frame key level. So this is how you match time and price. Time is the day of week. Time is the economic calendar giving you the session. And price is the high time frame key level and sell stops to buy stops ranges that we need to pair together, right? One without the other is useless. We're pairing them together here. Wednesday low of the week with a high time frame key level. Here's a 4-hour chart. Here's the weekly open. We see the market open up kind of choppy, right? And then we see it manipulate lower with this big move down. We're bullish. So we know that this is market manipulation into a high time frame key level. We're also trading into discount of this low to this high here, right? So we trade back down into discount and we run out a range low with Monday's low sell stops here, right? So we have inducement. Okay, so if we're remembering those weekly profiles, we run out Monday and Tuesday become inducement for the high time frame key level when we have a Wednesday low of the week, right? And let's look at the economic calendar, right? So Monday, no news. And this is why I said, again, Monday is usually a skip, right? Tuesday, we can see we have a 10 a.m. red folder news event. However, this is where I said time and price need to match, right? So we do have something here that indicates time could be of essence, right? On Tuesday. However, does time and price match? No, we're not at the high time frame key level in a discount. So we skip Tuesday, or we can trade the retracement down on Tuesday, and I'll teach you guys how to do that with the scalping episode. However, for now, we're working off the weekly range. So looking at Wednesday here, a very, very large day for high impact news. We've got 8:15, 8:30, and 10 a.m. red folders here. So we can see the market actually trade lower here. This is Wednesday into high time frame key level, premium and discount. We're in discount and we run out of sell stop into the high time frame key level. So right here, what's happening is time and price are matching and they're meeting, and you should see the institutional sponsorship then kick in. So that's why we then wait for SMT and then a change in the state of delivery with the lowest down close candle that goes into the high time frame key level and sell stops here. When we close above that right there, you could be a buyer from this candle right here, right? So you can see the bodies close right there. This candle trades right down into it. That could be a buy, but then we do have a fair value gap here. Can buy here, and there's a small order block here. Can see that there, and we then see the market trade higher, right? So this is the kind of price action you see when you have time and price meeting. Okay. And SMT, changing the state of delivery, very important for setting the higher low of the week. This now is Thursday. Okay. So we had Wednesday low of the week here. We're still looking for that buy side liquidity that way up above. And then we have this for value gap here. We see the market engineer a range just above it, right? Sell stops and buy stops. The market then trades into the high time frame key level here. And keeping in mind, this is Wednesday low of the week. So Thursday should still see expansion since we've not hit the high time frame key level. So Thursday, we create another low here after running out this. Market trades higher. And then we see a retracement here. We still haven't run out a range high here. And then we see Friday continuation from the discount of this here and this premium discount FVG here. I will be using this example as well for the next chapter. It's going to show the model very clearly. So if you guys would like to get ahead on that and actually try and figure out the scalping model here for this move here, because this is exactly the scalping model I'll be teaching you guys, I would urge you guys to go and look into your charts and try figure it out before I drop the video, right? And this is NFP of last month for reference of what you want to look at. All right, guys, that's the end of chapter number 2. If you guys enjoyed, like, share, subscribe, and turn on post notifications because chapter number 3 is going to be up on the YouTube this coming weekend.